This indicator, even though it's a free version, has an outstanding performance. I can confidently say it competes well with paid market indicators and, in many cases, even outperforms them. So, stick with me today as I introduce you to a tool that makes trading much simpler and can become your reliable assistant. Hello, dear friends. Welcome to your own channel, Prime Risk. Today, we're going to learn about an indicator that aims to solve one of the biggest problems traders face: identifying precise entry points. One of the main reasons most people lose money in the market is their inability to stick to a clear and well-documented strategy. They take every position for different reasons, which prevents them from mastering their strategy. This happens because traders either don't know the main reason for entering a position or keep changing their reasoning. Today, we're going to completely fix this issue. This indicator also requires some filters, which we'll explore together later. So, stay with us until the end of the video to fully learn this precise strategy. We start by going to the TradingView website and selecting the Lance Algo indicator from the Indicators section. When we add the indicator to the chart, it looks like this. At first glance, it's clear that this indicator is designed to show us entry and exit points. However, it has several components that we don't necessarily need. To optimize it, we go into the Settings and uncheck sections like Shape, Labels, Line Fills, Lines, and Tables. By removing these options, we can now view the chart in a cleaner and more organized way, which is a crucial aspect of trading. I've seen some beginners using so many indicators on their chart that the actual chart itself becomes almost invisible, which is a mistake. You should be able to clearly see the chart and candles and analyze them while effectively using your tools. When the indicator displays a green triangle, we should enter a buy position. Similarly, when it shows a red triangle, we're ready for a sell position. But should we jump in as soon as a triangle appears? Definitely not. Every indicator has its margin of error, but we can reduce this error margin and improve its win rate by adding a few elements. Therefore, we need a complementary tool to filter the signals from the Lance indicator and enter positions at the most optimal points. From the Indicators section, we search for EMA and add it to the chart. We then go into its settings and change the length value from 9 to 50. This means it will consider the moving average of the last 50 candles instead of 9. We also make it bolder so it's easily visible on the chart. Entry points. For a buy position, whenever a green triangle appears below the candle, that's our first buy signal. Next, we check if the Lance indicator's moving average color changes to green, which serves as our second signal for buying. Up to this point, we've seen two signals, but trading based solely on these two can still lead to losses. That's why we use the EMA as an additional filter. The third buy signal is issued when the green triangle appears above the EMA 50. In simpler terms, we only focus on green triangles above the EMA 50 for buying, and for selling, we focus on red triangles below the EMA 50. If you found the video helpful so far, a small like from you would mean a lot to us. Let's look at some examples. Here we see a red triangle formed, and the moving average has also turned red. Thus, our first two signals are confirmed. Has the triangle formed below the EMA 50? Yes. So we can enter a sell position at the close of this candle. For the stop loss area, we can place it above the previous high or retracement. The safer your stop loss placement, the higher your win rate, so make sure to practice this well. For the target, we can set it to 1.5 to 2 times the stop loss amount. As we can see, the price initially moved toward the stop loss, but since our stop loss was placed securely, we eventually exited the position with a profit. Another example, the indicator formed a green triangle, and the moving average is green. So we should enter, right? But when we check the third signal, we see that the triangle didn't form above the EMA 50. This means we shouldn't enter the position. As we can see, if we had entered here, we would have faced a loss. By adding a proper filter, we can significantly increase the efficiency of this indicator. However, keep in mind that every strategy has its margin of error, which is why we use stop loss. In the continuation of the previous position, which we didn't enter and avoided a loss, the indicator gives us another sell signal. The moving average also turns red. Now, we see that the red triangle has formed below the EMA 50. With all three signals confirmed, we can enter a sell position here. The stop loss is placed above the previous retracement, and for the target, we set it to twice the stop loss. The target is beautifully hit. Let's look at a buy example. The indicator forms a green triangle above the EMA 50, and the moving average is green. We enter a buy position here, placing the stop loss below the previous low and setting a target twice the stop loss amount, which is beautifully achieved. Keep in mind that since this indicator is trend-based, it shouldn't be used in ranging market conditions as it will reduce its win rate. When we see the moving average color changing rapidly, it's one sign that the market is ranging, and it's not a suitable time to enter. According to the backtests we conducted, the win rate of this strategy with the filters added is above 75%, which is excellent for an indicator. However, don't forget that it requires backtesting and practice to master it fully. We're planning to release new tutorials with amazing strategies soon, so make sure to subscribe to our channel so you don't miss out. See you soon.